Hey everyone, it's Dale here. In this video I'd like to talk about a long-term trade which I took on US dollar Japanese yen, and in this trade I like to demonstrate that in order to be a successful trader you don't need to be an intraday trader. You don't need to sit in front of the computer the whole day and smash the buttons all day long. But there's another way, and the other way is swing trading. It takes time, you need to be patient, but yeah, it pays off, and actually this is my favorite way of trading. So in this video I'd like to show you a recent trade on the US dollar Japanese yen, and I'll show you exactly how the trade went from the beginning. That means the reasoning behind the trade. I'll also show you the stop loss and take profit placement, how the trade went, and you know, everything about the trade. So you can replicate this into your own trading and you can trade like me. So let's get started. What you see before you, this is the US dollar Japanese yen chart. It is a daily chart. That's the time frame that I use for my swing trading analysis. And what you see here is how the chart looked before I entered that trade. There was a downtrend, and in that downtrend there was a newly formed heavy volume zone right here, this heavy volume zone. From there the price continued downwards again. At this moment I thought that this would be a great opportunity to join in the sellers and jump in a short trade as well, and the plan was to jump in at this line. So I waited for a pullback and my plan was to go short from there. Now I'm showing you like this so you don't see the outcome. You see how I saw the chart when I was thinking about entering the trade, right? So this was the plan. Wait for the pullback to that heavy volume zone, which represented sellers adding to their short positions as the price was dropping. So I wanted to join those sellers, jump in here at the beginning of the volume cluster and go short from there. It was not just about this volume cluster, but there were more confluences telling me that this was a strong level to trade from. One of them was this. This was a reaction to this level in the past, and that was telling me that it was a strong support. When the price blew past the support in here, the support turned into a newly formed resistance, right? So that was another setup which pointed me to this level. Another signal to go short was a first deviation of yearly view up. This yellow line right here, that's the yearly view up, and those gray lines, those are deviations. When the price is trending, then the price likes to make pullbacks to those deviations and make reactions to them, like in here or like in here, right? And as you can see right here where my short level was, the first deviation was very close to the level. So my idea was that if there is a pullback, there should be a reaction to that first deviation, right? So what I had here were three independent setups telling me to go short from there. Volume profile setup, price action setup, and a view up setup, right? Perfect scenario. So what I did was I placed the limit order right here, and I was waiting for a pullback. And let me now show you what happened. Price hit the level, I entered the short, but then the price went against me. Now I think that at this point I should tell you where the stop loss and take profit was and what was the reasoning behind the stop loss placement and take profit placement. So let's start with the stop loss placement. I always place my stop loss behind heavy volume zones and also behind significant swing points. In this case, heavy volume zone was this one, and the nearest significant swing point was this one. This was the swing point, right? So my stop loss was at top of this swing point right here. This was the stop loss. It is behind heavy volume zone and above nearest swing point. Now, regarding the take profit, I always want to place my take profit in a heavy volume zone or before price reaches heavy volume zone. So in this case, the take profit was based on those volumes, and I wanted to quit the trade before the price reached this heavy volume zone. So take profit was roughly in here. Now let me show you what happened. The price almost hit the stop loss, not even here, and then the price finally started the sell-off. I was waiting for that sell-off like 2 or 3 weeks. It took forever, but you know, the rules are rules. You just stick to your plan, you hold your trade until it reaches stop loss or take profit. So I held the trade, and what happened here was that the price almost touched my take profit. It didn't reach it. My take profit was somewhere in here, exactly 0.5 pips below this point. So I missed the take profit. It was terrible. But I still held the trade. I didn't quit it because my take profit was in here. So I held the trade, and then price finally hit it. And as you can see, there actually was a beautiful reaction to this heavy volume zone. Let me move the chart forward and show you. This was the heavy volume zone, and right here, this was the reaction to it. So as you can see, the take profit placement was exactly spot on. It would be obviously better to have it that half pip higher, so I wouldn't be stressed out and, you know, quit the trade here in here. But yeah, that didn't happen. The price went up. Fortunately enough, it hit that deviation of VWAP and reacted to it, and then, you know, I was able to take the full profit in here. It was over 500 pips with just a single trade. Now, the big lesson from this trade, at least for me, was that I should always stick to my plan 100%. You know, twice I felt pretty terrible about this trade. It was in here where the price went against me and it was rotating above my short level entry. So that was the first instance. And the second one was when my take profit got missed by 0.5 pips and there was a huge reaction. So that was the second time. I just hated this trade. But I stuck to my rules and I held the trade, and as you can see, it paid out. I was able to take the full profit right here. So the lesson is stick to your rules. It pays off. And also, you know, you don't need to be an intraday trader to make money trading. As you can see, this was just one trade where I made 500 pips. Like, how many intraday trades would you need to take to make 500 pips, right? Quite a lot. So yeah, that was that. I hope you guys liked it. I hope you liked the analysis. And if you'd like to learn more about volume profile trading, then I recommend visiting my website. It is at trader-dale.com. If you click trading course and tools, then it will take you straight to this page where you can browse my trading education and indicator packs. Currently I'm running a special Easter sale, so you can take advantage of it and get my best educational and indicator packs for a discounted price. It is the volume profile pack, order flow pack, VWAP pack and smart money pack. You can get them separately in here, or if you scroll down a bit, then here is a special deal where you can get it for a discounted price. All of those packs together, right? So yeah, that's about that. Thanks for watching the video, and I'll be looking forward to seeing you next time, and until then, happy trading.